Hey everyone, and welcome to this explainer. Okay, I am absolutely thrilled to dive into this with you today, because we're about to unpack what is frankly one of the most highly anticipated financial events in India's corporate history. If you're someone who loves understanding the mechanics behind massive market shifts, you are in exactly the right place. Today we're demystifying the upcoming Jio Platforms IPO. We're going to use the hard data to cut right through the noise and show you exactly what's going on under the hood of this telecom and digital giant.
All right, I want you to just take a second and really absorb the sheer magnitude of this number. 13 lakh crore rupees. I mean, wow. According to pre-IPO projections by Elara Capital, this is the staggering valuation that Jio Platforms could potentially command. To put that into perspective, a valuation like this instantly places Jio among the absolute most valuable listed entities in the entire country. But, how did we even get to this astronomical figure?
Well, to understand where this is heading, we've got to hit rewind for a second and go back to 2020. Specifically, that intense pandemic lockdown phase. Looking back, it's wild. But that is exactly when Jio was setting the stage for this massive IPO moment. In a breathtaking sprint, they raised around $20 billion. We're talking $5.7 billion from Meta in April, another $1.5 billion from KKR in May, and $4.5 billion from Google in July. This proves super early on that global tech giants had absolute unwavering market confidence in Jio's long-term vision.
Which brings us to part one, the mega IPO details. So keeping that history in mind, let's look at the actual nuts and bolts of this upcoming 2026 listing. The strategy here has evolved quite a bit behind the scenes. The draft red herring prospectus, or DRHP, that was filed in June 2026 reveals some really interesting choices. They're targeting up to 27,500 crore rupees. But here's the kicker. This is a 100% fresh issue. There is zero offer for sale component. So what does that actually mean for an investor? It means existing shareholders aren't just cashing out and taking their money off the table. Instead, every single rupee raised goes directly back into the business, primarily earmarked to repay the massive debt of its telecom subsidiary.
But honestly, an IPO of this colossal size wouldn't even be feasible if it weren't for a major regulatory unlock back in March 2026. The government amended the Securities Contracts Regulation rules so that companies valued above 5 lakh crores can now list with just a 2.5% public float. Without this specific rule change, floating a company of Jio's sheer size would have been incredibly complex and highly dilutive to the existing shareholders. It was a total game changer.
Moving right along to part two, the valuation paradox.
Okay, so the mechanics are set, but here is where we hit the real financial mystery of this whole explainer. To truly grasp Jio's valuation, we absolutely have to look at their main rival in the Indian market, Bharti Airtel. And when you compare them side by side for fiscal year 2026, there is a stark contradiction. Airtel absolutely crushes Jio in average revenue per user, or ARPU, sitting at $257.40 compared to Jio's $214. Airtel also leads in total consolidated revenue, pulling in 2.11 lakh crore against Jio's 1.47 lakh crore. By traditional telecom metrics, Airtel is undeniably winning the top-line race.
So that begs the million-dollar, or rather the trillion-rupee question: how on earth does a company making less money per user and less total revenue overall end up with a higher projected market valuation than its biggest competitor? It's a fascinating paradox, right? Why is the market willing to pay such a massive premium for Jio?
Let's figure that out in part three, cracking the code. To solve this puzzle, we've got to break down three massive structural advantages that Jio holds over its peers. These are the underlying engines really driving that 13 lakh crore projection. Advantage number one, pure scale, and it is perfectly captured by this number, 52.4 crore. See, while Airtel might have a larger global footprint across 15 countries, Jio is literally laser-focused on the domestic market, and they command a colossal Indian subscriber base of 52.4 crore. That is nearly 40% of India's entire mobile user base. When your key metric is basically ARPU multiplied by total domestic subscribers, Jio's sheer volume gives them a massive, undeniable edge.
Advantage number two is all about the infrastructure. Let's talk 5G architecture for a second. So Airtel took the non-standalone, or NSA route. Basically, they upgraded their existing 4G towers for a faster, cheaper rollout. Jio, on the other hand, opted for the standalone, or SA route. Now yes, it required a massive 2 lakh crore rupee early investment, but in business terms, it means Jio possesses a fully cloud-native, structurally superior network. It offers way faster speeds, it's highly enterprise-ready, and crucially, it lowers their long-term operational costs. It's like they built a brand new, high-speed highway from scratch rather than just throwing some fresh pavement over the old road.
And then there's the third advantage, and honestly, this is where the real magic and the real premium happens, the Jio digital ecosystem. See, Jio isn't just selling you a telecom pipe. They are building this deeply integrated, super sticky digital world. Through Jio Cloud, Jio Savin, Jio Cinema, and their AI-led platform Jio Brain, they are locking consumers into an entire ecosystem. Once a user's in, it's very, very hard to leave, which opens up massive future monetization avenues that go way beyond just selling mobile data.
And the analysts are completely picking up on this. To quote Elara Capital directly, Jio is shifting from a scale-based telecom operator to a monetization-led digital platform. That right there is the key takeaway. The market isn't looking at Jio as just a telecom company anymore. They're giving it that juicy tech company premium, valuing its potential to monetize this vast digital ecosystem, a lot like how you'd value a Google or an Amazon.
All right, let's move on to part 4, Under the Hood.
Because to be fair, we can't just look at all these rosy projections, right? We need to take an entirely impartial, balanced look at the raw financials and the stated risks. First up, the numbers. And honestly, it's a story of really consistent execution. Just look at the revenue from operations climbing steadily from 1.110 lakh crore in FY24 to almost 1.50 lakh crore in FY26. But even more importantly, look at the EBITDA, their operational profitability. It's grown from roughly 54,000 crore to over 76,000 crore in that exact same period. They aren't just growing top-line revenue. Their fundamental profitability is scaling beautifully year over year. But, and this is a big but, the DRHP also explicitly outlines some real risks that any informed observer absolutely has to acknowledge. First off, they're carrying a seriously heavy debt burden, which frankly is exactly why these IPO funds are earmarked for repayment. Second, they rely pretty heavily on third-party providers for their physical tower and fiber infrastructure. Third, and actually I found this super fascinating, Jio Platforms doesn't legally control the Jio trademark. It's held by other Reliance Group entities. And finally, as a digital-first company, they are deeply susceptible to tech and cyber disruptions. So these are the neutral market realities that really balance out all that hype.
Bringing us to our final section, part 5, The Road Ahead.
So, with the massive strengths and the very real risks clearly laid out, what actually happens next? Let's trace the chronological roadmap to the actual listing. The DRHP officially dropped on June 19, 2026. Barely a week later, on June 25, SEBI asked for clarifications, which is a completely routine step in the regulatory review process, by the way. Factoring in standard SEBI timelines of 30 to 75 days, the absolute earliest realistic window for these shares to hit the open market is between August and October of 2026, so the clock is officially ticking.
Which really leaves us with this one massive final thought. We've explored the entire paradox today. A company with lower average revenue per user potentially commanding a higher valuation than its biggest rival. So, will Jio's bleeding-edge 5G tech, those 52 core domestic subscribers, and that incredibly sticky digital ecosystem be enough to ultimately justify this 13 lakh crore rupee premium? Or are the fundamental realities of RPU and heavy debt going to bite back? The foundation is officially laid, the filings are in, and now? Now we just wait and see how the market ultimately decides. Thank you so much for joining me on this explainer, and as always, keep learning.